Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Friday, January 24th. A little bit of an active trade in the overnight session, doing a lot of scratching out of the ranges and adding new ranges as far as to the downside. We kind of started the evening in a mixed note. In early morning we started seeing a collapse in our prices led by the beans. Currently we're in the neighborhood of around 13 lower in the bean market, down around $3 in the meal, down 70 points in the soybean oil. And the wheat and the corn are kind of kicking in on the downside as well, both off around 3 cents. Two things seemingly happening in here early this morning. Number one, overnight, Argentina got some very, very good rains through their grain growing belt. And so obviously the trade's been trying to keep an eye on that, and that has been conducive as far as weather forecasts go. That's coming on in. Weather's perfect in Brazil at this point in time as well. More rains are expected in Argentina, so we're kind of narrowing the window of having any type of weather problems down in South America at this time, drawing in the selling interest, most notably in the soybean market. The other thing has been about the world currencies. Apparently the Argentinians are potentially going to go, maybe potentially float their peso to the dollar. This has been kind of keeping the farmers unwilling sellers of their soybeans. We know that they're sitting on a large crop from last year, not willing to sell because of political and economic reasons of turmoil that's been going on. This may give the farmer a little bit more incentive to go and sell their beans, and that being the old crop. And now once again, their new crop, with them getting rains, and they're going to have another second crop to go and sell. The little rally that we saw yesterday in the bean market brought some Brazilian hedging into the market from that avenue. So once again, this whole bean story could be starting to break down in here, with the fact that South America is getting closer and closer to producing a crop. They logistically can get it out. The bottom line is that business is now going to start to move away from the U.S. The U.S. having a monopoly in the bean and in the soy meal export arena over the past several months. We do know that at the end of the day, when we get our commitment of traders report that comes on out, that the trade is still net long the beans and the soybean meal. So once again, this could be adding some added pressure to the technical side of the picture, particularly with us now moving below the 200-day moving average in the soybean market here this morning. We'll get our weekly sales out later on this morning. We're looking in the neighborhood of around 300,000 to 400,000 tons of wheat, in the neighborhood of around 500,000 tons of corn. People will be keeping an eye on the bean sales to see if there's anything coming as far as cancellations out of out of China, which has been somewhat of a feature this week. And we'll also be getting our meal and soybean oil sales out here this morning as well. For the corn and the wheat, nothing really new in it. Once again, it's been kind of working its way sideways in here. We'll get our sales out for it as well this morning. There has been talk that also that China's been kind of limiting its amount of interest in trying to get some corn on the books from the U.S. We'll see if that comes to fruition here this morning. So once again, we're on the defensive. Today's the last trading day for the options for the February. We'll get a cattle on feed report out after the close, a commitment of traders report. But once again, most markets are kind of seeing their rallies being limited. The only bullish bullet point out there going fast forward with the comfortable supply and demand tables we have right now could be weather problems down the road. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.